This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
People assume that what's most important is the return. And you're right, but also there's another component that it doesn't matter what you put on your sheet. You could say 30% IRR, it's the best deal you've ever seen. And it's almost always like an amateur hour situation when someone's running around the event saying, I've got the best deal you've ever seen in your life. It's like, at the end of the day, they don't care about your deal at all until they know and trust you and your team and know that you're professional, that they see how you add value, that you're a class act, have some institutional polish to you, professional, etc. And so the trust in the team matters way more than what returns you promise people. And also the chance that you may lose all their money matters a lot as well.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. As syndicators scale into larger deals, some may consider family offices to partner with on certain deals. Understanding the approach as well as getting the connections becomes absolutely crucial. Now, our next guest knows all about this. He helps $100 million plus net worth families create and manage their single family offices and currently manages 14 clients of his own. Now, he has helped many high net worth families invest in real estate and other asset classes as well, successfully closing on $500 million worth of transactions. Now, he is the author of the best-selling book, The Single Family Office, and his family office club has well over 3,000 registered investors, and he hosts 30 live events a year with 6,500 participants at those live events. He has also recently released a book called How to Start a Family Office, Blueprints for Setting Up Your Single Family Office. Now, with all that, I'd like to welcome Richard C. Wilson to the show. Richard, thanks for coming on, man. You bet. Now, guys, if you like what Richard has to say, you can reach him via the contact page at familyoffices.com. Okay, Richard, go ahead and tell the listeners a little bit about your journey.
Sure. Yeah. So I started 16 years ago, our investor club. We have 28 people on the team. Last year, we closed on $84 million worth of transactions that we sourced and structured directly. But we have thousands of people attending our events and getting all types of deals done that we're not directly involved in. I bought billionaires.com about a year and a half ago. We're interviewing 100 billionaires there. So we interviewed Tony Robbins a couple of weeks ago, an audio interview. We've interviewed Mark Cuban, Jeff Hoffman, Grant Cardone, and we've hosted 190 events and written 13 books the last 16 years. And so we put out a ton of content, I think more than the rest of the family office industry combined, and that's been the way we've built our business. Really is just being giving and generous with insights and documenting our journey, and then that's led to growth of our model over time.
Excellent. Yes, I mean, I think most people that follow the show probably already heard of your group. You guys have been around for a very, very, very long time. So what prompted you to start up the family office business years ago, like 16 years ago?
Sure.
What got you started?
Yeah, so I'd started 4 or 5 businesses before I got out of high school that didn't work too well. I had one semi-successful business in college, but I knew what it felt like to have a business idea that just nobody wanted. I'd pitch it, no one wanted it, pitch it, hard to sell. And then when I was raising capital for a investment manager, I came across the word family office, and I said, oh, okay, well, if I'm raising capital, why don't I just only focus on the people that have all the money and focus on family offices? So as I tried to do that, I found there were basically no trail guides, almost no books on the industry. The only people writing about it online was some Financial Times journalist who had never worked in the industry a day in their life. I said, wow, this is so backwards. So every time I learned something, I would just share it on my blog. I had a free blog at blogger.com. And I just started sharing once a week, and I started getting 100 hits a day. Random people started calling me, started getting 500 hits a day. And I said, okay, well, maybe I'll write 3 posts a week. Started getting 1,000 hits a day, and I started writing 2 posts a day. And I started getting 5,000, 7,000 hits a day to my website, just the organic traffic. And I spoke a couple hundred times in 16 countries and did book deals with Wiley and Bloomberg. And I basically just wanted to focus on a niche that was not saturated. And every time I put energy into it, people were interested and wanted to learn more. And that's just what we've been doing the last 16 years, is just putting more energy into a space that is super valuable. But for whatever reason, a lot of people hadn't really focused on being helpful to other people in it.
Yeah. Well, I think it was one of those scenarios that people just didn't know how to even get started or even get connected to any of those folks. Because I think for many folks, it's out of reach. They don't even know where to begin. Like, how do you even get a hold of a family office, right? So how did you establish that? Like, how did you end up creating those connections to those sorts of people?
Yeah, at the beginning, I was calling on wealth advisors that didn't have accredited investors, so they couldn't put money into some of the stuff I wanted to show them. And then I talked to just one that said, oh, we're kind of like a family office. And they said, I don't know if you've heard of that term, but basically means we only serve people that are all worth 10 million or more or much higher. And I said to myself, oh, okay, that's who I should have been reaching out to this whole time. And back then the term was rarely used back in 2007. Now it's much more broadly used, but most people still don't know what a family office is. So in the future, I think it's inevitable there'll be more and more family offices and more demand for family offices. And by building this thought leadership muscle on, like, how do you write a book, how do you create a YouTube video, how do you do a podcast or a mini series, then that's allowed us now with billionaires.com to enter a niche that is, I wouldn't say saturated, but there's tons of information out there on billionaires. But getting a Fifth Avenue real estate like domain name essentially in that niche, and then convincing billionaires to answer our interview questions is a very different game, because it's not like people haven't thought before to write stuff on billionaires, right? So it's interesting looking at those parallels, because again, there's a lot of money there, and like, how could we lose building a platform of tons of information on billionaires? The worst case scenario is that I learn a ton about how billionaires think and grow their businesses, and I'm sure some of our current Investor Club members would benefit from that. And the best case is we get, one or more billionaire clients out of it. So we kind of look at it as if the niche is valuable enough that long term it would benefit us to be a top 5 player in that niche, then we'll just invest all the elbow grease it takes to be one of the top leaders and have more helpful content than anyone else in that niche for the long term.
Oh yeah, for sure. No, I think that's a brilliant move, because what it does is you get, just like I said, you get access to those sort of folks that you can interview. And what happens is that you get to funnel people into the family office brand as well.
Right.
And like you said, to just even talking to Tony Robbins about wealth is just one-on-one is amazing. Just opportunities like that is huge.
What's interesting is Tony said that one of his best pieces of advice is to remember that proximity is power. And people listening to your podcast, you're running 300 million plus of assets under management in real estate. Like, just being close to you and your mental thoughts can help someone elevate their game. And all of the interviews on billionaires.com are free, by the way. If you want to see what Tony said, it's just a 14-minute interview. But you can check that out. But he says proximity is power, and that is why people listen to your podcast. It's why people come to Family Office Club conferences, and it's why we're growing billionaires.com. It doesn't make us $1, but Tony said in the interview that he made $400 million off of one deal that he did. But the only reason he got that deal done is he was swimming in the same circles as a lot of investment professionals. So when the opportunity arose, he not only got to see the opportunity, but he could execute on it because of his level of thinking and all the people around him. He had the know-how, but also the relationships to get it done. So I think that was a really powerful piece of feedback I got from Tony, and I thought would be relevant, because that's kind of like what you're doing here at the podcast.
Exactly. Yes. So it sounds to me like there's actually 2 groups that you're serving, right? It sounds like you're serving the family offices in terms of, connecting them with potential investors, and you're also helping obviously investors, connecting them to the family offices. So why do family offices reach out to you? Are they looking to invest into these assets that we talked about in the green room, like big type of development deals or stabilized assets, that kind of thing?
Yeah, for sure. We just had one of the top 10 most famous hedge fund billionaires that you'd recognize the name of. One of their co-founders just reached out to us to set up a family office. We just had a daughter of a commodities billionaire reach out to us last week to help set up a family office. And then many times we have like second generation 50 and $200 to $400 million families reach out, or someone who just had an exit or just about to. And a lot of them are over-advised potentially on public market wealth advisory. They may not be happy with who's advising them, but they have plenty of advisors there, and they might need to upgrade that. But they're very under-advised on direct investments. And so we help them see that in the area of cash flowing real estate or their real estate allocation, they might want 8 to 10 different brain trusts managing their money in different geographies with different laser focus and different benefits. But their public market stuff is almost pure defensive strategy. Their real estate is kind of in the middle. They're choosing the food group, the geography, the brain trusts are going to manage that. Typically only managing real estate assets in their own backyard or in one little niche they feel comfortable with on a small scale maybe. But then they play pure offense in the operating business niche where they made their money, whether it's manufacturing or pharmaceuticals or whatever it may be. And they usually are way over-advised, have lots of experts here on the public market stuff. But on the direct investments, it's like, yeah, my friend referred me to this person. Or, oh, yeah, well, I think I just did some of this and some of that, and we don't really know why. There's no rhyme or reason. So we try to add some advisory overlay to the direct investment side and say, okay, out of our investor club, we see thousands of deals per quarter. Here is the top 3 most interesting out of like 1,000. And here are some strategies you could consider that other families use in the direct investment area, help them build a platform approach, just like a private equity firm would, to the niche now that they're a really credible player and they've had an exit in that area. So it's kind of a long answer, but we do advise on that, help with that. We've helped set up about 200 family offices for families, where we have the book called How to Start a Family Office and a mini series on YouTube called How to Start a Family Office. And we really enjoy doing that. We don't charge anything for it because when we develop that relationship, now we've built the trust and they've gotten so much value from the free advisory and consulting work that now we can help them with executing and hiring people as well. And then we just make money when they have positive results from that versus charging them a consulting fee.
Now, what is the minimum when you're setting up one of these family offices? What is usually the minimum that you'd see in terms of like fund size, that kind of thing?
Yeah, families that have 7 to 10 million of assets or higher may need some components of a virtual family office in place. When you start having more than just your primary home and maybe the last home or two you used to live in that you grew out of as rentals, and you start making investments as an LP into funds, and you start making investments into operating businesses, you're going to have some need for a higher level of organization and strategy. Most clients come to us when they're at 15, 20, 30, 50, several hundred million, and we serve several billionaires. One billionaire we've closed 19 transactions with so far, and we've gotten some deals done with publicly traded entities, et cetera. But a lot of people want to start using the benefits of a virtual family office when they're just at 7, 10, 12, 15 million of AUM, because it helps them get to 30 million or 100 million. And I started this business when I only had $600 in my bank account, and I owed $1,100 a month for my studio apartment in Harvard Square in Boston. And it was by studying family offices and building my business within the niche that I was able to build my balance sheet and build my team. So wherever you're at, you can use these types of strategies to grow from nothing,
Yeah, man, I love hearing about stuff like that, where it's just like, it just took pure grit and work to build what you got, and what you got is totally amazing too. It's awesome stuff. So sounds to me like for the most part, many of these families, when they're asking you about putting together a family office for them, it sounds to me like there's like some estate planning, some risk consults, things like that, right? To really help protect some of the wealth and redeploy it, like you said, strategically, depending on where that office is going to be focusing on. Does that sound right?
Yeah, for sure. They oftentimes need to upgrade their insurance advisor. Maybe they want 10 million of assets structured in Belize offshore that, cannot be penetrated, practically by anyone as long as you form it before an issue comes up through the right person. But also a family office quality wealth advisor, and then those direct investment advisory type strategies. So some people only need one or two pieces of that. Some people need the full enchilada, and they're just about to have their exit and try to figure all that out.
Yeah. Now, thinking about the syndicator that might be listening to this right now, I'm sure that they're thinking, hey, maybe it's time to reach out to a family office. I have, because it sounds to me, and we were talking in the green room a little bit about this, it sounds to me like a family office, they're not going to go with someone who's brand new, just starting out. They want to see a track record of success. They want to see you've done some projects before you really approach someone like you that can connect that person, the syndicator, to a family office. Does that sound about right?
Yeah, it does sound right. I mean, if you have parallel or other very related experience and you de-risk the deal through having amazing collateral in place or amazing terms, you can get past some of those early stage concerns. But yeah, it is a big mistake for people to go out there and say, because direct investments are easier to raise capital for than a fund, all else equal, in the family office space. So the double mistake is to go out there and be like, okay, we're only going to do a fund. We're not going to take anybody's money deal by deal. And even though we're early stage, everybody charges, X percent of fees. So we're just going to charge industry standard fees, and the only option is a fund. You're just kind of killing yourself in the beginning of having any progress, because people prefer to do deal by deal and see exactly what their money is going into, all else equal. And then also, while a certain fee structure, like let's say a 7 pref and 25% profit split to the GP, may be somewhat industry standard in some people's eyes, if you're new, you are not industry standard yet. You're like immature in terms of a platform, so you haven't really earned the right to charge industry standard fees. So having an open mind and just knowing the best investors are typically entrepreneurial brains that want to custom structure something and form more of a joint venture than be an LP-GP relationship sometimes, especially if you're early on, I think is really good for people to know. And then also, most people are missing a 3-minute video from their founder that articulates their strategy on their website and their materials. They're missing a one-liner that says what they do in a clear, compelling fashion. So just having really concise materials is going to help you attract better quality investors.
Yes, absolutely. Absolutely. I think it's using the family office model can certainly help those types of syndicators really start scaling up. But it's really like you said, creating a bunch of credibility around what it is your story is, because otherwise you're not going to get there. You just won't.
Right. Yeah.
So given where things are going right now, in terms of where the economy is, how are family offices, I guess, coping with some of the inflation, some of the issues that you're seeing? Or is this still full steam ahead? Are they pulling back a little bit? Are they just waiting by the sidelines? What are you seeing these days?
Yeah, a bunch of stuff. So one, lower percentages of debt, recapping old debt, getting sweetheart deal terms to save someone that had bridge debt that's now floating, which, is becoming more and more of a problem as rates keep going up, and more of those times to reset the rates is coming for a lot of people. Some family offices, one billionaire I work with, is just simply not investing right now until things crumble, and then he's going to go in really hard. But I just read a book by Howard Marks, who's a multi-billionaire founder of Oak Tree Capital, and it's called The Most Important Thing. And in that book, he says over and over again how when other people see risk, that means there's less risk, because now everything is on a little bit of a discount. And when it seems toxic and there's tons of risk, that's when some of the best times to invest are. And so it's counterintuitive, but if you're not sure about investing right now, you should have felt that way 2 years ago when rates were at record high and we had a 14-year bull run and everyone was having parties, 42 offers on every multifamily property out there. That's when you should have been afraid. Now there are opportunities out there, and people tell me, oh no, the market's not down X percent or Y percent, but our average closing has been 22% below list price, offering all cash or cash plus seller financing on short-term rental properties that we're acquiring. And so I think that there's some families out there that love this type of environment, and it's going to be the biggest buying opportunity of the last 15 years at some point. And our view is just to layer into it. And even Howard Marks a multi-billionaire, one of the most well-known hedge fund managers on planet Earth. He doesn't claim to be so smart as to know exactly where the bottom is or exactly what's going to happen next. He says that you may not be able to tell exactly where things are going, but you better be able to stick your head out the window and see where you are right now in time and which way the pendulum is swinging. So I like answering it that way because quoting a billionaire who's way smarter than me, but just trying to emulate the actions of someone like that, and it's so backwards that people are like, I don't know about doing anything right now, even though everything is like on sale a little bit. It's like, well, 2 years ago you wrote the check when everything was at a record high, you know? So that's it's really interesting to watch the psychology of that. So it's so lame and trite for me to say, oh, you got to invest when there's blood on the streets, but to have the courage to actually be investing when others want
to actually do it. Yeah.
It's a different thing, right?
Yeah. Saying it and doing it is two different things.
Oh, yeah.
Right. No, it's, so I mentioned the green room. We have a coaching program, and we're still coaching students. Like we're still taking them on, and the reason why is like the assets that they would probably want to get into right now are still very, very, very overpriced. You know,
Right.
there's still money out there to go into those assets. It doesn't make sense to do it right now.
Yeah.
You have to wait a little bit, and it's going to be scary. It will be scary.
Yeah.
You know, but like the billionaire points out there, it's like that's the time to buy.
Yeah,
you know,
yeah,
that's the
exactly.
time.
There's if you look at hundreds and hundreds of deals, then eventually there'll be some where they crack on the price, or they're in a real bad spot, or they're looking to. We just bought an asset off someone who was in their 70s and they just wanted to retire, and it was an oceanfront asset, and we are able to come in all cash and say, hey, 26% of all deals under contract don't close because the banks mess up the deal. So we'll pay all cash. For sure we're going to close. And here's the price. And we got a steep discount for doing that. So I think the opportunities are out there, but it's not like the whole market has already moved down a huge chunk. And multifamily is different than office, and office is different than triple net or short-term rental properties. So, we only invest in two areas on our own balance sheet because that's what the wealthiest families we know do, is focus on just one or two strategies, typically at most three. We focus on multi-location, profitable medical practice platforms. So we have equity in 24 medical practice locations doing $45 million a year in revenue. And then we focus on short-term rental properties, and we have equity in 84 of those. And those are the two niches that I'm referring to most often, which is different than multifamily or retail or these different asset like food groups are all going to behave a little bit differently, obviously.
When you're doing the short-term rentals, are you looking at specific areas then? Like, are you looking at like low-risk areas where there's no chance of a government coming in and just shutting it down or something like that? Or?
Yeah, we're looking at specific areas. Right now, we're most aggressive in Florida and Hawaii, but we have assets in Sedona. We have assets in the Grand Canyon area. We have some real estate in Scottsdale. We also have some properties up in the Poconos and a decent amount of exposure in Florida already. But government limitations sometimes keep out the mom and pops and the riffraff. So like we don't mind there being some challenges because it's barriers to entry, and we can navigate those. We can do things that the mom and pop can't do. And 88% of all the properties that Evolve manages for people, they own one property. And so what you have in this space is people that own one property, maybe two, and real mom and poppy operations. And then you have a few private equity groups, and then you have some property managers who manage tens of thousands or hundreds and hundreds of properties. And these guys don't care as much as the mom and pops. The mom and pops don't have the software and the big teams. So the private equity groups that can kind of be in the middle there in terms of really caring about the results is where we see the opportunity. And only less than 1% of short-term rentals are owned by institutions. Multifamily is at 25%, and we just think eventually it's going to move up to, SFR is 2.4%, and you've seen headlines for the last 5 years of Goldman Sachs buying up whole neighborhoods, but they still only own 2.4% as an institutional investor base. So those numbers take a long time to move, but we think that there'll be institutional money pouring into the space eventually.
Interesting. I always associated a great deal of more risk around the short-term rental space. Again, I'm not a short-term rental guy. Mm-hmm. And to what you said something earlier about, when you see a high level of risk, that's when you buy it, or I'm paraphrasing, right?
Sure.
But I guess I was under the impression that family offices usually try to find like fairly low risk, fairly consistent type of returns. So it sounds to me like they're not afraid, they're not adverse to taking a little bit of risk on certain deals. And not saying that short-term rentals are risky, because I think it sounds to me like you got it covered. But is that usually the case though? Are they okay doing higher risk type of scenarios, or what?
Yeah, really good question, because this ties into a huge mistake a lot of people make when they come to our investor club events. People assume that what's most important is the return, and you're right, but also there's another component that it doesn't matter what you put on your sheet. You could say 30% IRR, it's the best deal you've ever seen. And it's almost always like an amateur hour situation when someone's running around the event saying, I've got the best deal you've ever seen in your life. It's like, at the end of the day, they don't care about your deal at all until they know and trust you and your team and know that you're professional, that they see how you add value, that you're a class act, have some institutional polish to you, professional, etc. And so the trust in the team matters way more than what returns you promise people. And also the chance that you may lose all their money matters a lot as well, right? So to your point about doing risky deals, there's a place in very wealthy families' portfolios for some venture capital deals and invest in some startup psychedelic mushroom company or cannabis dispensary or whatever out there. There's a place for VC deals. We encourage families to only do really high risk deals in the niche where they made their money, because then they can play defense and offense and influence the results. And so we're just not startup people, and so we just really encourage people to say no to everything unless they made their money in that niche on the risky side. But in the scheme of things, when we are doing, when family offices look at a deal and there's very low debt to moderate debt and diversification within the portfolio, but still a laser focus on a certain strategy, then they're usually able to get their arms around what could be perceived on the surface as relatively risky, whether it's, like the motel to apartment conversions group that we were talking about earlier, or short-term rentals or some other strategy. Investors want someone who is laser focused on one or two strategies, because that's how they think as well, and you can't be an expert on 19 niches. The trust matters more than the returns, and the risk management does matter more than the returns for most families as well.
Yeah, I mean, those are the fundamentals of anything, really. I mean, even when we first started building our real estate business, it came down to how do we present, how does our deal flow work, what sort of are we good people that are on our word, that type of scenario. Yeah, it's the same thing. It's the same thing. Trust is currency. Trust seems to be a more expensive currency, if there's such a thing, than the typical dollar.
Yeah.
Right. That's it looks like.
That's what it's all about. And what I found is you need like 3 compelling, high conviction things. But if somebody doesn't like you or your team or trust you, then nothing else matters. It's like you're done. And so you email someone with a Gmail email or Yahoo email address because you didn't spend $8 and get in a professional email, or you're running around all stressed out at a conference, or you're just like super pushy and rude. Like one person, we have like 1,000 members in our club, and most of them are just total class acts and great people. But out of 1,000 members, you can imagine we have like 1 or 2 that just don't really get it. And one of them got really upset at an investor because they met him at an event, emailed them, and they expected him to reply back right away, and emailed him another time. But the more he emailed him, the more the investor was just like, I don't know who this guy is. And so he complained to me, and he said, hey, this guy didn't respond to my emails. I said, listen, I can't force the horses to drink the water, and they're their own human beings, and you have to face this. It's gravity on planet Earth that you are fighting for their attention in their email inbox against everyone else. So you have to be, politely persistent and professional and engaging and build a real relationship, and all those like 101 type things that you probably coach people or mention here on the podcast, et cetera. That goes without saying if you've been in the space for more than even 6 months or a year. But some people really need to hear that it's about planting seeds long term. We had one female real estate developer join our group, didn't know what a family office was, use our community, and she got an $8 million check and a $40 million check within 18 months of joining. But she was doggedly persistent, polite, custom structured things. Probably helped that she was female in a male-dominated space of real estate development. But she saw it through and got it done. And she wasn't shy about following up, but she wasn't rude and didn't get mad at people and take it personally if they didn't reply right away to their emails either, right? So
Yeah, I mean it's all part of investor relations.
Yeah.
It's yeah, you can't be a jerk in this business.
Right.
If you are, you get pushed aside very, very quickly. Yeah, if you don't close, if you're a jerk, yeah, people don't want to deal with people with others like that. I won't. There's plenty of them out there.
Yeah, there's
I won't deal with
also
it.
whatever some people are naturally funny people. Some people are naturally, they love playing golf. Some people are naturally very outgoing. Like I'm not the most social, outgoing extrovert, just probably why I built an event business around myself, so I didn't have to be. But I do get excited about certain types of ideas, like how to structure deals or how to negotiate certain transactions. And sometimes it's the passion and the energy you have that other people are attracted by, and the combination of a laser focus plus the passion and energy and the execution makes you stand out from other people. And whatever your natural personality is, you shouldn't try to fake being like Grant Cardone if that's not who you're normally like. You should be the version of yourself, but the best version of yourself that is high energy and really focusing on something you're passionate about. If you're not excited about it, then how are you going to get other people excited about it?
Exactly. It's very hard to live a lie like that, and I use air quotes, to live a lie of trying to project something that you're not over a long period of time. It's hard to do.
It's painful too. I mean, it's if you've got a bad partner or an idea that's just not working, you just need to take it out behind the shed, and not your partner, but the idea, and just kind of do something that's aligned with who you are. And if you're doing three things and two are working, one's not, then just focus your energy on what's working instead of trying to keep something alive that wasn't meant to be.
Yeah, that's it. So what sort of predictions do you see for the 2023 year in terms of like family office interaction with what's going on in the real estate market today?
Yeah, so I think that more and more people are within like a forgiveness period or rate resetting or about to reset period, and those are going to come in waves every month the next 6 to 18 months and probably the next couple of years, honestly. The smartest people I know who are brave enough to take a guess think that rates may go back down in 2025 or 2026, but most people aren't brave enough to even guess what the government's going to do. Most people thought, there's banks failing, maybe they won't raise rates, and they still went up, right? So, but I think family offices are there to fill in. When banks go dark, then family offices step up and say, okay, well, instead of 6-7% debt, people can actually take our money at 8-9% debt plus an equity kicker, or we can do our bridge lending at 13-14% debt instead of 12% in 2 points. They're doing 13-14% in 2 points. And so family offices love those types of opportunities. A lot of family offices are playing on the debt side right now, or stepping in to save a deal, and then they get some equity just by providing the cleaner debt. So we see combinations like that happening quite often, and we're just often encouraging families to focus and find partners who are focused like you guys are, and focus themselves. And if everybody's doing what they're best at, and the whole machine works better, versus a family office saying, we need to control everything, we're going to do everything in-house, it usually just doesn't work. Yeah, absolutely. Well, good. We've covered a lot of stuff here today. What sort of bulletproof advice would you have for someone listening right now? Maybe there's a syndicator who's thinking about maybe approaching some family offices. What sort of bulletproof advice would you offer that individual? Yeah, a few things. The more valuable the investor, the more concise and direct your insights need to be. If you want to get the attention of an ultra-wealthy family, then add value to them first and get them a client, bring them capital, bring them an introduction to another client, and figure that out up front. And I would research your competition and the type of investor you're trying to approach, and make sure that the one-liner for what you're doing is very unique from your competition, but hits that target investor right between the eyes with a ton of value, so they lean forward and say, I need to learn more about that. Or that's amazing. We want to do something like that. Like, for example, in the medical practice space, the average doctor who's wealthy gets the chance to invest in somebody else's medical practice once or twice over 15 or 20 years. And so by providing them access to invest in such things, it's really unique through our medical clinic capital division. So other than that, would love people to check out what we're up to, built our business like you through thought leadership and giving value first. So at familyoffices.com, you can see our event schedule coming up. You can see our membership options if you want to come. And if you have a membership, you get access to our investor portal. You get access to our 15 live events per year. And we have a free book on familyoffices.com, a free book at capitalraising.com. If you're an investor, we do in the medical practice space or short-term rental space, just go to investorclub.com and just fill out that 30-second form there. And then my head of investor relations or I will get in touch with you in the next day or two.
Excellent, excellent. I mean, that's all great advice for anyone listening out there that really wants to connect and get connected with some of the family offices. Richard and his team can certainly help you out. And those events are, they're top-notch events too. I've seen them online. They're just amazing. So guys, if you want to reach out to Richard, reach him via his website, as he said, familyoffices.com. Check out his event schedule as well. He's got a lot of good stuff coming up. Hope this introduction to family offices, if you haven't heard of them before, is something you should definitely check out as you scale your business and want to grow the business, and you're going to need a lot of capital to do it. Thanks for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.